For anybody that's for anybody that's there, if you could just tell me if you can see the screen and hear me before we kind of get rolling. Put in the chat if you can. Great, thank you. And you can hear me as well, correct? Okay. Thank you, Lua. I'm not going to go into the rest of that one. That's a long one. Give it a couple minutes or a minute or two before we get started to let people kind of join if they want. Okay. Well, I got to be whoop, all the people that come on time, so we'll get the ball rolling. If people arrive later, that's great. But at least for all of you, we will get the ball rolling out of respect for all your time. So first thing is I've got up here is I named this Be Your Own Boss, Make Your Own Money for a reason because I kind of want that to sink in for a minute because I can't think of anything else, to be honest with you, where you have no boss and no employees outside of trading. Maybe I'm wrong. I mean, maybe I couldn't think of it, but essentially everything we do in life, either you've got a boss or you've got employees. There's very few things that you're reliant solely on yourself and nobody else to make money. And I think that's the beauty of learning how to trade is this gives you options in life, right? Whether you use it as a side income or full income, whatever, it's again, you answer to nobody and you have to basically talk to nobody as well as far as employees and kind of like teach somebody. So that alone is something I think is hugely overlooked in this whole world of trading options and trying to make your own money. So again, I named this for a reason because that's all I could think of as far as like the only job where there's no boss, no employees. So before we get started, I always like to start with who I am because not as like a bragging thing. It's just because I like people to know that I'm just a regular guy with a full-time job that isn't trading or teaching. It's a separate thing from this. So probably no different than many of you. The only difference is I put in the time to learn how to trade correctly and actually use this to create another income stream for myself. I started back in about 2012. If you look at this thing, let me just shrink these things. I was one of the original rising stars on something called Tasty Trade, which is now called Tasty Live, which is the largest online financial network in the world. I started teaching trading around 2016. So I have 10 plus years of actual trading experience of actually trading my own money. I'm what they call a strategy and probability based trader, not always easy to say, volatility based. I don't use things like technicals or fundamentals. That does not mean you can't yourself. That's just myself. And I'm part of this Udemy world and Sharper Trades community that's over 100,000 strong. If you ever have any questions, I'm always happy to answer them. You can always email me at cal@optiontradingforrookies.com. Okay, so let's get over here. All right. So I like to point this out. I kind of look at my journey to where I am as kind of like this car. So this is everything I've learned and all the expensive lessons I've been through to get to where I am. But do you need to know all of this and have experienced all of this in order to drive a car? Basically, do you need to know all these parts in a car in order to drive a car? Absolutely not. Same thing about the way I teach. This is everything I know and everything I've been through, but do you need to go through all this? No, because I put everything in the teach the car, I mean, sorry, drive the car kind of format. So I've left all that stuff on the background. If you want to learn it all on your own, I absolutely always encourage that. But if you just want to get to driving the car and skip the thousands of hours and the tens of thousands of losses, this is the way I put my courses and my teaching together, hopefully to get you to skip ahead, as they might say. So, what are we going to learn today? Well, this is more like a kind of an illustration of the world of trading. It's how simple making money can be once you know how to do it. We're going to kind of go over the foundation of all option trading. You'll see what that is. We're going to learn how to use option strategies to fit our assumptions. And all of this is what we call defined risk trading. Don't worry about any of this making sense yet. We're going to go through this stuff today. What you can expect today is I'll stay around at the end to answer any questions you might have. If you don't have any or you think of them later, again, always email me at cal@optiontradingforrookies.com. Happy to answer everything. I'll also talk about our Sharper Trades community. It's not going to be a big sales pitch for thousands of dollars. Basically, everything I do is based on that driving the car analogy. So all the courses and all the services I designed are supposed to be affordable in time and money and basically become shortcuts. Skip the thousands of hours and the tens of thousands of losses and just get straight to like, what do I need to know in order to be a successful trader and how do I do it? That's kind of my methodology. So I've added this in the last few webinars because I thought it was so kind of important. This is one of the billionaires from Shark Tank. And his saying was, in order to get ahead in life, you have to show up. And basically, being here, well, that's the first step. You've shown up, whether you're watching it live here or recorded later, that is the first step. You're never going to get ahead in life if you don't show up to at least give something to try and learn about it. So, the basis for trading is verticals. So, the first question is, what are verticals and why do I need to learn them? So we're going to go over here, and I specifically, here's the four reasons. Foundation is defined with strategy. I'll go through them one at a time, but it's foundation of all other option strategies. And I specifically use the term strategy here to mean this is a rule-based form of option trading. So it's meant to remove emotion from your trading and just create confidence. And because of the way verticals are structured, it inherently makes you manage your own risk, helps you stay consistent, and build a path to confidence and steady returns. So this is really for serious traders and steady traders who prefer consistent profits to lucky streaks or, hitting home runs. I like to just basically define it as, simply put, when you're doing the vertical kind of trading, emotion kills profits, rules like verticals help protect them. So every option strategy is basically a variation on this vertical theme. If you've heard of things like calendars and diagonals and butterflies and iron condors, things like that, they're all based on verticals. Even advanced strategies like things like straddles and strangles are merely naked variations of verticals. So every option trader should really start with verticals and understand them completely before they move on to any other strategies. But an important point here is You don't ever have to move on. You can absolutely stick with verticals your whole trading career and do well with them once you understand them. So, verticals are a defined risk strategy right here. And what that means is you know exactly how much you can make and how much you can lose on every trade before you get started. So, the reason this is important is because it helps you build confidence. Obviously, we're all worried about worst case scenario, right? You make a bunch of trades. We've all heard margin calls and all this kind of crazy stuff. Well, verticals, you know what you're getting into. When you put on the trade, you know exactly best case scenario, what you can make, and worst case scenario, what you can lose. So based on that, you can set up the kind of risk profile that you're comfortable with. So if things go wrong, you're like, okay, I can handle this because I already know what my worst case is. Um, Option strategy is used when you have a directional assumption. Verticals are directional. You've heard of people, buying calls to bet on the stock going up or buying puts to bet on the stock going down. Similar with verticals, we have to have an assumption to kind of get started. We want to have a directional assumption. We'll also take a quick look at something called iron condor, which means no directional assumption. We just want it to stay in a range. And the reason we use verticals over kind of everything else out the gate is because it's going to increase our POP. POP means probability of profit, and that is basic definition means at what's my probability of being at least $1 profitable at expiration. So I put on an option trade, there's a time limit involved. When that thing expires, the day it expires, what's my chance of being profitable? At least $1 profitable on the day of expiration. So that gives me my probability of profit. Again, don't get confused with terms. I'm explaining them here quickly. My courses are all designed to get much deeper on all this stuff and kind of go into much more, not intense, but just kind of explain a lot better so you can understand it and you can go back again and again. A vertical itself is simply a combination of buying a call and selling a call, or buying a put and selling a put. And the reason we do this again is because it creates a defined risk direction-based trade. Buying a call is defined risk as well, but you'll see with POPs why that's not what we want to do. And selling a call is a naked strategy, and that runs the risk of much bigger losses. Again, dangerous trade if you don't know what you're doing. So verticals kind of built in everything. It's defined risk, it's direction based, and it gives you a pretty good POP, probability of profit, which is kind of what we're always looking to do. So now I can't teach you to trade here, obviously, in just a few minutes. That's kind of what all my courses and services are for. But what I really want to do today is show you why we want to trade like this and also how easy it is once you learn to do it. So I trade every day. It takes me less than 50 minutes a day to generate another income stream. So if you got 50 minutes a day, then obviously eventually you can do this too if you learn how to do it correctly. So because we're doing it now and the market is open, we're going to go and do this in real time to show you exactly why verticals are so key and how to use them. So I'm going to start here. This is the market today. You can see it's kind of in crash mode, right? These are all the indices right here. This is the S&P 500. This is the NASDAQ. And this is something called the Russell. This is essentially the market. And you can see they're all big down today. Not important for our purposes. Just wanted to point it out that we're in real time and that's kind of what's going on. So as a volatility-based trader, most of the time, what I'm looking for is high volatility. So what I want to show you here is if I click on SPY, this is the number I want you to look at right here. This is called IV rank, and this is how volatile this stock is today. And that just for ease of math, I just say, okay, that's about 19. Now I'm going to click on the Qs, and you see right here, okay, that's about 23. And I'm going to click on IWM, and you see that's about 11. So if I'm looking for high volatility, I'm going to start here with the NASDAQ. That's the simple first step. Highest IV rank, depending on what I want to do, obviously, but for today, this is kind of the lesson we're learning. High IV rank. Just real quick, because I always start getting into this thing, and all of a sudden I realize something went down or something went bad. Can somebody just type in real quick to make sure they can still see it and still hear it? Just real quick, just say yes, or somebody says okay, just to make sure we're all good. Thank you. Perfect. Thanks, everybody. I just want to make sure I haven't lost it. I've done this so many times and it's always wrong. Okay, so here's going to be a wide a real awakening for I think a lot of you. So right, all I want you to look at over here is POP 50%. Again, what does that mean? At expiration, what are my chances of being profitable? In this case, it's 50-50. And why is that? And that's because this is purely stock. Now, everybody thinks stock is some kind of like, I got better odds of making money on stock than anything else. But the day you buy it, you don't know if it's going to go up or down tomorrow, a month, whatever. Whether you believe it or not, and this is the actual software showing you, when you buy stock, it's a 50-50 shot. There's a 50% chance it can go up, there's a 50% chance it can go down. It's just like flipping a coin. So normally speaking, stock can be kind of expensive. This is the NASDAQ. And if you wanted to buy the NASDAQ, obviously most people aren't going to want to buy just one share of something. So just as an example, I'm going to do like, let's say you want to buy 100 shares of NASDAQ. Well, look how much this costs. This is going to cost you $60,000. That is a lot of money. And most of us, if not all of us, can't afford to just spend 60 grand on buying 100 shares of the NASDAQ stock in the hopes that one day it goes up. And again, this is the key. It's a 50-50 shot. We have no idea if it's going to go up or down over time. And again, when you buy stock, we also know when you're going to need to sell it or want to sell it, right? It's just like anything else in life. It can be up, it can be down, but when do you need it? That's the part you don't know. 50-50 shot, and we never know. So that's step one. When you buy stock, 50-50 shot, and it's obviously always going to be pretty expensive. Even a $50 stock, if you buy 100 shares of it, that's 5,000 bucks. It's a lot of money. So that's step one. Buying stock is generally pretty expensive, and the POP is always 50%. So what do people generally do in a market when they believe it's going up? Well, most of us have heard we want to buy a call, right? So, so all the talking heads and all probably the stuff you've heard over your life, for the most part, the reason most people lose money when they trade, because 90% of people who trade options lose, that's because they don't know how to use options correctly. Again, most people, when they think the stock is going up, are going to want to buy a call because that's all they've learned. So let's do that as an example. So what I would say here is, here's the price, 602.25. The best chance or the best bang for the buck when you buy options, if you're going to do it, is you want to buy the call, because remember, we want this to go up. So we're going to buy a call just below the stock price, the nearest one. In this case, it's the 600 call, right? The stock's at 602. We're going to buy a call that's at 600, just below the stock price. And we want it to go up. Obviously, that's the key. So how much is this going to cost us? Well, this call is going to cost us $2,300. It's going to expire in 65 days. Unlike stock, we can hang on to that forever, but stock is expensive. So buying a call is a much cheaper alternative, right? This was $60,000 for 100 shares. One option also controls 100 shares. Don't worry about the lingo, just kind of let it wash over you as to what this all means. But one call option is basically the equivalent of 100 shares of stock, and we're basically controlling 100 shares of stock for only $2,300. So that seems like a good deal, right? I mean, I don't need to spend 60 grand. I spend 2,300 and I've got 65 days to hopefully be right that this thing goes up and makes me some money. But again, what's the important point that I was stressing here? POP. Look at this, 37%, right? That's extremely low. In fact, how low is it? Well, the average slot machine in Las Vegas is set to roughly a 40% POP, a 40% win rate. So how many of us really think if we go to Vegas and play slots for an investment, we're going to make money over time? I'm going to guess we all would go like, that's insane. I would never do that, right? Of course. Well, guess what? Buying a call option is the same or worse. So this is exactly why most people lose money. They're doing it wrong. They're buying calls. These are long shots because you got a 37% chance of making money. And again, that 37% just means you're essentially making a dollar at expiration. So you're just profitable. Doesn't mean you made $1,000 like people are hoping to do or 10,000. There's a 37% chance you've just made $1 at expiration. So what do you think the chances are of making 1,000 or 2,000? Obviously way less than 37. Again, if there's one thing you should know about trading, this is the biggest thing. Buying calls or buying puts is absolutely the wrong thing to do and why 90% of people who trade lose money. They're relatively expensive, what you're getting, and the POPs are always low. Okay, so this is bad. Stock's expensive, but you can hang on to it forever. Options by themselves, as they call like a naked option like this, is also fairly expensive, cheap compared to stock, but your probability of making money is super low. So let's go to the alternative. I want to make the same bet that the stock is going to go up. So let's look at something called a call vertical. So I'm going to go to a call vertical now. We're at the same 65 days. We're going to do the same thing. We're going to buy that same 600 call that we just bought for $2,300, but now we're going to sell the 605 call instead and create what they call a long call vertical, which means if at expiration we're above 605, this is a full winning trade. And what does winning mean? Well, in this case, I'm paying $309 for this trade. So it's about $2,000 less than we just saw on that long call option. I can make at most $191, and that means that the stock closes above 605 in 65 days. Well, it's roughly 602 now. So that's a pretty good number, right? Doesn't seem that far off or that unreasonable that 65 days from now, if all goes my way, it's going to be above 605 and I'll actually make $191 on this trade. But here's the key. This is also a 50% POP. So this case, stock, which was 50%, was $60,000. And obviously, what people don't think about with stock is every dollar it goes up, if I bought 100 shares, I make $1. But every dollar it goes down, I lose $100 as well. So that's a lot of movement, right? A few dollars up or down, and I could either make or lose a lot of money in a short amount of time. With the call verticals you saw, that was 2,300, but there was a 37% chance of making money. This is about the same. It is the exact same probability as buying stock, but instead of $60,000, I'm only risking 309, and all I needed again to do is go above 605 in 65 days, and I'll walk away with $191 profit. So here's the keys to all this. Number one, defined risk. When I talked about verticals, you know exactly how much you're going to make and how much you're going to lose. Well, here you go. The most I can lose is 309. The most I can make is 191. When it comes to the long call by itself, I don't know what I can make. I can make an unlimited amount of money if things go my way. Difference being, the odds of things going my way are very slim. It's most of the time not going to happen. And it was $2,000 more investment than this. So I'm spending over $2,000 more for the chance of, like, again, a slot machine kind of victory just to make a couple bucks. To make a lot of money is even less. So that right there is the difference between stock, long call, and this is a long call vertical. So there's one more way to play upside, and that's something called a short put vertical. Long call vertical as you saw, but short put vertical is the gives me the same assumption. My assumption is I want the stock to bounce, but what you'll see here is, let's get this. So there we go. I'm going to go to the same 600 strike now. So before we were buying that 600 call and selling the 605. When you do put verticals, you do them a different way. You sell the put right below the stock potentially, and you buy one further away. So don't let that complicate anything. Here's the key to the whole thing though. So in this case, I'm buying the 600 put. I'm sorry, I'm selling the 600 put and I'm buying the 595 put. I'm what they call, this is a short put vertical, or I'm selling a vertical now to start. What that means is I collect the money first. They give me money when I sell this. Doesn't mean that I get to keep it. but they give it to me. They put it in my account when I sell this, just like selling a car. They give you the money. But in this case, the way it works is, remember my max profit on the other one was 191. Well, this one is 174. So I make about what, rough almost $20 less, and I'm risking a little more. That was like 303 or something like that. Now I'm risking 326. So I'm risking a little more to make a little less. What that means is my POP should go up, and it does. Anytime you're risking more to make less, your probability of profit is going to go up. In this case, this is how this one works. Also defined risk. I collect this when I sell it. Doesn't mean I keep it. At some point during the trade, I have to close it, and at that point, I'll know whether I keep money or lose money. But in this case, what I'm hoping for is the stock stays above 600. And this is why the POPs are in your favor. Because when I bought the call vertical, I wanted it to go above 605 to be a full winner, right? That was the key. When you sell a put vertical, all I needed to do is stay above 600 for 65 days. Well, guess what? It's already above 600. So as long as it stays here or goes up, I make money. And that's why the POPs are higher when you sell something, because it just has to stay above a certain number, and it's always going to be above it when you start, as opposed to the vertical, it really has to move in your favor, the long call vertical. Again, I don't want everybody to get caught up in like, I know I'm giving you a lot of numbers, I'm showing you a lot of stuff. I just want this to wash over you to see kind of how verticals work, because once you know how to do this, hopefully you can see it's not that complicated. Complicated now because it's all fairly new. But the key to this is really about POP, getting a better POP, defining your risk, knowing how much you can make and how much you can lose on every trade. So if everything you went in with, if you made all these trades, if everything went to hell and it all fell apart, you know worst case scenario. If I've got 10 trades on or something, okay, if they all lose, the most I can lose is 10,000 or $1,000 or $500, that kind of thing. So that's the key long term to trading. Now I know this is a lot, but again, this is really for just illustration purposes. My courses and services teach this in way more detail. I just want this to wash over you. Stock versus buying a call versus buying a long call vertical versus selling a put vertical. Those are your four options when you want to bet on a stock going up, and you can see how the POPs change and the risk reward changes as well. So let me go back now because I know I've kind of probably overwhelmed you a bit with so much there. But let's get on to trading option dues, which is the mindset shift. So we just washed that over. You kind of see the rough idea of how it all works. But a big part of what I teach is mindset. Because I see people all the time, selling the become a millionaire overnight scenario. I made $20,000 last month. Can you do that? Yeah, of course, people do that and they can do that. But what they don't tell you is that it's risk versus reward. Anyone making 20 grand a month, which is entirely possible, but anyone making that is probably risking about $100,000 a month to make that, right? That's the part they don't tell you. Oh, I made a bunch of money. Okay, well, how much was at stake? You happen to be a winner, but had you lost, if everything went wrong, what would happen? So you're probably risking close to 100 grand if you're looking to make 20 grand in a month. So do you have that kind of money or risk tolerance? Okay, most of us don't. So this is kind of what I call home run thinking. And I can tell you from personal experience that in the beginning, before I knew what I was doing, I did this. I had a few months where I was making 10 to 20 grand a month, and I thought I knew everything and I was killing it. And then guess what? It all went bad, and I lost about 100 grand in about 3 months. So home run ball is not a long-term income strategy. And a big part of what I teach is risk management and learning that we're not looking for home runs. What we're looking for is consistency. Consistency beats big wins. We're looking to do singles. The only way to make money consistently and forever is by hitting singles. That's just research-based facts. All home run hitters eventually strike out. So if you're a home run hitter, then what I teach is definitely not for you. My goal is to teach people who are looking to create a consistent revenue stream, kind of with very little time and effort, that supplements your income and maybe even someday replaces it if you get good enough at it. But my students have always been telling me how this kind of rule-based trading makes them feel a lot more calm and comfortable because you're starting to see how this kind of trading hopefully can remove the stress because you kind of know going in what you're getting into. What's my worst case scenario and what's my best case scenario? So again, no home runs. Singles is how we make a living. And there's three simple steps to creating like kind of a weekly income stream. And how do we get there? It's very simple formula as far as like we're just looking for setups, then we're looking to make a vertical or an iron condor trade. Oh, manage risk and manage reward. Actually, let me go back real quick. I forgot to show you the last one, which is an iron condor. So you saw the verticals, that's choosing a direction. All these trades were meant to be, I believe the stock is going up from here. So an iron condor is different. What that is it's meant to stay in a range. So I'm going to use kind of roughly the same numbers as we just did. So this is an iron condor. You saw me sell a put vertical when I thought the stock was going up as one option. Selling a call vertical means I think the stock is going, oops, I think the stock is going down. Selling a put vertical means the stock is going up. So what I want with the iron condor trade is I want the stock price to stay between these two yellow lines. Terrible drawing, I know. Let me try that again. So basically, in this case, if the stock price stays between 555 and 645 for 65 days, I can make $155 and I'm risking 345 to make it. But look at this, my POP is way up here at 58% because this is not choosing a direction, this is choosing a range. I'm just saying I believe the stock will stay in this area over the next 65 days. And if it does, I'll walk away with $155. And there's a 58% chance that I will do that, that I'll make some money on this trade. So this is an iron condor. It's basically selling two verticals. Don't worry about the logistics. All we want it to do is stay in a range. So verticals, we pick a direction. Iron condors, we sell two verticals to create a range. And that's what an iron condor trade is. And it's usually a pretty good POP as well as you can see, and a good risk reward. We're risking 345 to make 155 with a 58% chance we're going to be successful. So that's an iron condor because I forgot I was going to bring it up here. So back to the three simple steps. Finding setups, then setting up our vertical iron condor trade, and then manage risk and manage the trade. But unfortunately for new traders, these three steps, although they look simple here, are kind of generally overwhelming. So before we wrap up here and get to your questions, I just want to ask you to think about something, which is how many of you see the potential here to generate another income stream, but obviously don't feel 100% confident going out and doing it on your own just yet? Because everything I've just shown you is quick and easy when you know what you're doing, like I do. Obviously, I can show you real quick, blah, blah, blah. But if you don't know that, it all seems like, a foreign language. As trading rookies, you probably don't know all the steps or aren't comfortable with them. So there's a lot to worry about, right? I mean, you got to pick the right stock at the right time, set up the trade correctly, obviously maintain discipline, manage risk, which is a big thing about what I teach. The list goes on and on. Obviously, a little overwhelming, right? Because there's just a lot. But how can you get to that revenue stream without spending the thousands of hours that I did and going through all the losses that I did? Of course, again, that takes me back to the driving the car. Just basically go straight to driving the car, which is how I've designed everything. The reason I've done all this is because I've been through it and I thought, hey, there's so much I've learned and there's so much I've lost. There's got to be a simpler way to explain this because this isn't rocket science. Everybody tries to make options trading out as something that you got to be a financial guru, you have to have a math degree. None of that is true. If you have the desire and you've got a calculator, pretty simple stuff once you learn it. But the learning it is always the tough part, right? Getting over the hump. So, besides my courses, What I've done is for those traders who kind of just want clean, simple, reliable guidance, I've created this thing called an option income alert. So what you get here is the benefit of kind of a structured, everything I've done is already backed by research. I don't make this stuff up and its own experience. And it's an experienced trader, and all you kind of do is follow along. And these aren't just make-believe trades that you see on TV. These are things I do. These are fully formed trades that I do myself in real time and then send you the real-time alert so you can execute it yourself if you want to. So you don't have to guess, you don't have to stress. It's basically just like a plug and play kind of system. You just plug right in and get going. So the service itself offers up 2 to 3 trades per week. And the reason I do this 2 to 3 and not 5 or 10 is because I've found if you just bombard people with trades, it's overwhelming. It's just too much. We're all beginners. We don't have the money. We don't have the time. It's just overwhelming. What I'd rather do is give you 2 or 3 solid trades per week. So it's not overwhelming. You can pick and choose the ones you want or do them all. I try and keep them as small as possible, meaning the risk reward. I try and make these trades no more than like 50 to a couple $100 in risk to make 50 to a couple $100. These aren't $1,000 trades. We're not trying to make 20 grand. Again, I want to teach you to hit singles. So one day you can do this on your own. I send them out in the first hour generally of the market being open. What I do is I send out the whole setup, the reasoning behind it, and the specifics. And I also do management. When I manage these trades for winners, I send out those alerts as well. So you know when to take these off to get the best possible kind of return on your trades. Um, and again, once you know how to do this, it's really less than 15 minutes a day. This is pretty simple stuff once you learn it. But like everything, when the first time we all opened up Microsoft Word or Microsoft Excel, it seemed like, what is this? And once you learn to use it, piece of cake, but you have to learn to use it. So this is one way I came across, which I thought might be the best way to kind of skip ahead of the line. Just follow along with me and learn how to do it correctly. This is I call it kind of like plug and play trades. Now the other option is if you're not interested in just copying trades, but actually gaining the confidence to create, make, and manage your own trades, I've created the Pro system instead. And this isn't just alerts, it includes the alerts, and it's not just courses. I kind of like to think of it as a complete trading system designed to take you from kind of the absolute beginning, from zero, from beginner to intermediate to advanced to eventually consistent trader. So it's kind of like imagine logging into the market every day, with the confidence to know what you're doing, how to make a trade, how to manage a trade, how to manage your risk. That's kind of what this options mastery program is designed for. Because unfortunately, I know in this new world we live in, there's a lot of information out there, and people try to piece things together from random sources. You watch YouTube videos or you read blogs, you listen to podcasts. All that does is lead to confusion. What I like to come across here is it's more like a system. It's in one place. It's not scattered information. It's like you start here, you end here. If you learn it all and understand it, you'll be a consistent, successful trader in the end. So this is basically the same alert right here, but it's got all my courses, which I kind of break into beginning, intermediate, and I'll show you those in a second, advanced. And there's also a crash course, a 1-day crash course, along with all the other stuff I do, like webinars and things like that. So the beginning courses you may have seen already in Udemy, you may have already taken them. It's the understand options completely, basic option strategy, and make and manage profitable trades. That's a 3-part course that gets you from ground zero to trading these verticals and iron condors. The intermediate courses kind of step it up a bit. We get to advanced iron condors. The complete guide it kind of shows you what's out there as far as different kinds of strategies. Then there's covered calls. So if you have stock and you're looking to generate some income off the stock you already have, that's what covered calls do. And the passive income is basically teaching you to trade earnings, which is a much more high risk, high reward kind of scenario. So if that's your thing, that's a good course as well because these are instant gratification trades. Earnings are a 1-day event. Put the trade on today, I take it off tomorrow, win or lose. And then finally, it includes all my advanced courses. And this is if you ever get into advanced trading, this is naked options. So selling calls and puts, which you may have heard of. There's things like strangles and straddles. This is a big one. Ratio spreads is really the go-to trade for almost every professional trader. And then this is also a big one. This is how you roll trades. When you have naked options, you have to learn how to roll things correctly to minimize losses or get them back to profitability. So this is kind of an all-encompassing advanced section as well. And then, of course, I have this 1 day course, which I do a few times a year, which is like a 6 hour course where I just go from start to finish and kind of blow through it all. I've recorded that recently. I put that up here as well so that you have access to that as well through this Pro 1 day options alert as well. So kind of covers everything depending on what you're looking to do. That should kind of cover every aspect of learning how to trade and getting up and trading. Now, normally I have these things for like $49 a month is the normal alert, and the Pro is normally 99. But just like with Robert Hervachak, or however you pronounce his name, says, because you showed up today, you're in luck. Because I've got these 75% discount for life coupons. They're available for 5 days. There's only 10 of them. I do that for a reason. It's because I want people, the one of the big things about being a trader is you have to learn how to make a decision kind of a bit under pressure. So this is a decision. You got 5 days to decide whether you want to jump on or not. And I limit the amount as well because I just don't want no more than 5 or 10 people are really interested in doing it legitimately. I want the people who really definitely want to learn how to do this. So this limitation on time and amount kind of weeds out the people that are kind of, ha, I'm not sure. And they get to go with the actual like jump in and do it. Now, the good news is these are all month to month. So if you're not sure and you want to try it, you absolutely can try it because you can cancel in a month anyways if you don't like it. And if you like it, you get to keep this discount for life. And here are the coupon codes just to show you real quick. And I'm going to attach a link to this as well. All you want to do is go to Sharper Trades website, and then you go up to the product section here. And then you'll come to this page, which shows you the income alert, the regular and the pro. If you click on those, it'll bring up these two pages, enroll for 49 or enroll for 99. Click on those and it brings you to this page. You type in that web code, hit apply, and you'll see really all you're on the hook for is 12.25. And you can do this for as long as you want, or you can do it for a month. And obviously there's 10 left because I'm doing this now. And this is the pro, same thing to the $99 a month, it works out to less than 25. So less than $25. Again, you can cancel anytime. You get access to all that material I have and obviously the alerts as well. So let me just pull that up. Okay. So if if you got any questions, happy to answer them. Let me just sorry, let me throw that uh, file in there, which is the discount. And while I'm doing that, if anybody has any questions, there I'm sending in the deals and I'll also put them in links later. If anybody has any questions, happy to answer anything you might have. Hopefully that was valuable. But again, I'm here for as long as you need me to be here. So if you got any questions, please let her rip. Happy to help. Jerry, yes, you can use these strategies in retirement account. In fact, verticals are perfect for retirement accounts because in retirement accounts, if you're doing naked options, they make you shoot, I'm blanking on the term now. Uh, fully margined, which means if I sell a put or in a retirement account, let's say I sell a $10 put in a retirement account, what that means is they're going to take the full amount of the $10 stock. So I'm selling an option for $10 on a $10 stock. That's $1,000 in stock. It's 100 shares times 10. They're going to fully margin my account for a short put. Whereas with verticals, because it's a range, you can do these in any kind of account. Retirement is the best one because you don't get that fully margined. All you have to worry about is max loss. That's all they margin. So it's great. It's actually perfectly suited for retirement accounts. Um, can I do that from the UK? I don't know if you have access to the American markets. I know there's markets all over the world, but I can't speak to them as far as what uh, how they run their markets and how they do their options. I can only tell you from America. Yes, you can do this anywhere in America or anywhere you have access to the American market. Outside of that, Cesare, hopefully I'm pronouncing that right. If it's the UK market or the Chinese market or the Indian market, wherever the markets are, that part I honestly, unfortunately, can't answer. Hopefully that helps. Yuri, oh, no problem. One-on-one tutoring mentoring, I don't right now. I'm looking to possibly do that next year. So I will let people know when that comes along. But I haven't made any plans yet. But I think we're getting to that point now with AI where people are going to start learning the stuff, but they're going to learn it all incorrectly. So I think being in person and doing it with somebody that knows what they're doing and learning correctly is going to be huge. So just to help people out, I really think I need to do some part of that when I have the time and my schedule because I do work full time, so that makes it tricky as well. But yes, I'm looking to probably do some of that next year in a small kind of concentrated amount. Jerry, what kind of capital is good amount to start with? No problem, Yuri. Pleasure. I get this question all the time, Jerry, and you're not going to like this answer, but I give it to you because it's the real answer. Whatever you can afford to lose. And the reason I say that is because this is a brand new skill, and people think you can just jump in and kind of do it correctly right away, right? There's a lot of learning that goes involved as far as managing a risk and learning not to get scared out of trades, things like that. So to be safe, I always tell people like start with an amount that you can afford to lose. Because just like anything, if you were to start playing tennis tomorrow, you're going to start playing, Roger Federer and win. No, but when you get in the markets, you're playing Roger Federer, right? These are all the pros. So you got to expect to lose in the beginning. Hopefully you don't. Like I said, if you kind of follow along with what I do and maybe with alerts and all that, it helps you. But again, that would be my best advice. It's a learning curve. You have to learn to deal with the ups and downs of the market. And a lot of people, myself included, when you first start trading, something goes against you, and your first instinct is to close it before you lose any more. Whereas you learn to do this over time, you learn that, hey, over time it might come back and I should let this thing go because the odds will hopefully play out in my favor and it might turn into a profit. But I can't control that emotion. That's something you have to learn on your own. And again, that's a learning curve that everybody's is different. So yes, start with a small amount that you can afford to lose. I wouldn't expect you to lose it, but at least if you do, it's not a number that's going to kill you. Hopefully that's helps, Jerry. I don't know if that scares you or helps you, but that's just the kind of the honest truth as far as what I've learned over the years. Pleasure, pleasure. Anybody else? I'll be here for a few minutes if people are thinking. But, and again, if you think of something after we're done here, please go ahead and email me at cal@optiontradingforrookies.com. Anybody that wants to learn to trade, I am more than happy to help. That's what I love to do. I love to get people on board and teach them the skill set, especially as the world's getting tougher and tougher to make a living and money's getting tighter. Any way that you can kind of generate another income stream is, something that we could all use basically. So it's a good skill set to have. And once you learn it, you have it for life. Even if you don't use it today, you can use it forever. It's like riding a bike. For option trading, I use two platforms. The ones I recommend are the one I showed you here that I was trading with. This is Tasty Trade. This is my favorite one because everything I showed you here, it's kind of they've designed it to show all the stuff that you want to see, where most of them aren't as easy to read, and it's very visual as well, right? Like it's all very visual. So Tasty Trade is my favorite. I also use this one, which is Schwab's Think or Swim or Toss, they call it TOS platform. Similar as well. I know how to use it, so it's easy for me, but it's not as kind of easy to get up and started as Tasty Trade is. But both of those have all the things you need as far as implied volatility rank, all that kind of stuff. Just this one to me is much more visual and easy to see and use, but both are great. So Schwab's Toss or Tasty Trade. Anybody else? Happy to help. All right. I'll hang out till for 2 more minutes just in case anybody thinks of something. And if not, I'll call it quits. But I got a couple more minutes just to let this wash over and see if it makes any sense or you have any more questions to clarify things. Oh, Jerry, no, this is part-time. I have a full-time job. So this is totally a residual side income for me. I learned all this on my own on the side, and this isn't my primary income. This is just something that helps me generate more income on the side. And again, now that I've learned it, you can see how easy it is. Once you've learned it, you can see I can knock out a trade in a few minutes. And that's what I do. I literally trade for like 15 minutes in the morning, and that's kind of it. And that's how I generate a side income. And I know you came in late, but one of the big things I mentioned about why I named this Be Your Own Boss, Make Your Own Money is because there's no other job that I can think of where you have no boss and no employees except for trading for yourself. This is your money. Nobody cares about your money more than you do. And once you learn this skill, you can make money forever on your own without anybody else. You don't need a job. You don't need employees, so it's just something I think everybody should learn. And again, you don't need to use it today. You could just, it's a skill. It's like riding a bike. Once you learn it, you can ride a bike forever. Maybe you ride a bike once every 10 years, but you know how to do it. So when the time comes, once you know all this stuff, it's just a good skill set to have. And it's just comforting to know that you can make money even if you don't have a job or you're retired or anything like that. So hopefully that helps, Jerry. Pleasure. Okay. Um, Anybody else? Or I'll kind of do a 30-second countdown, and then if nobody's got any more questions, like I said, I'll wrap it up. And if you think of something later, you can always email me again. I'll just type it in here. Anyways, Cal at these. Um, so this is my email address as well. If you ever just want to just email me questions if you think of them later or at any time. Like I said, I'm always willing to help people that want to learn this stuff. I think it's super important and just a great skill set to have in life. All right. Looks like about it. Thank you everybody for your time. I really appreciate it. Hopefully that was valuable. And you're welcome, Yuri. Thank you as well. And I will see you all hopefully very soon. Thanks, says Cesare. I don't know. I'll stop there before I destroy it anymore. Thanks, everybody. Take care. And again, thanks for coming.